In 1999, the world dug thousands of miles of fiber optic cable. Less than 5% was ever used. 2 decades later, trillions are being spent on GPUs and data centers. Michael Burry calls it dark compute, the modern echo of dark fiber. History doesn't repeat, it re-uploads. Bloomberg recently mapped the AI money machine. OpenAI, Nvidia, AMD, Oracle, and Microsoft, each arrow feeding the next. Capital spending creates revenue, rising revenues lift stock prices, higher valuations attract more capital, which finances still more spending. A perfect feedback loop until cash flow can't keep up with belief. Burry saw this pattern before. In 1999, telecom capex grew at an 18% annual pace, exactly where AI capex is today. The dot-com boom ended not with innovation, but with excess. The numbers are rhyming. Tech capex is climbing more than 18% a year, yet cloud service revenue growth at Amazon, Microsoft, and Google has fallen by half since 2018. When spending rises while sales slow, margins compress, and the reflexive loop begins to crack. We are building compute capacity faster than we are finding profitable workloads. That's how bubbles form, not in panic first, but in inefficiency. Marathon Assets Capital Account described the telecom burst this way. Less than 5% of US capacity was in use. Wholesale prices fell 70% a year. The same reflex is alive today. Back then it was routers and fiber, now it's GPUs and AI racks. Both built on cheap money and boundless faith. The names change, the pattern does not. So Burry acts the only way he knows, with math and patience. His Cyan asset management filings show heavy put positions on Nvidia and Palantir. He isn't shorting the index, he's shorting the hype. Nvidia is the toll booth of the AI superhighway, priced as if monopoly margins will last forever. Palantir sells the dream of AI software leverage while depending on government contracts and belief. When momentum breaks, indices can hide behind rotation, but single name hype collapses under its own valuation bait. Short the droids, not the index. Michael Burry. Now even the winners are flashing warning signs. AMD's latest filings show something subtle but serious. Sales looked strong at $9.2 billion, yet accounts receivable have surged to $6.2 billion and inventory to $7.3 billion. That means customers are paying slower even as AMD claims record shipments. In a genuine boom, you don't see both record shipments and delayed cash. It's not real demand pulling product out of the channel. It's AMD's pushing inventory into it, booking the sale first and hoping the money shows up later. Super Micro tells a similar story. A double miss on earnings and guidance signaling data center customers pulling back. These are the first cracks in the GPU gold rush. When the fastest growers stumble, it often means the cycle top is near. The warning signs aren't just in tech spending, they're in the valuations themselves. The Buffett Indicator, which measures the US stock market value to GDP, now stands at 217%, the highest level ever recorded. The long-term mean is around 120%, and anything above 160 has always been marked bubble territory. At 217%, the market isn't just expensive. It's statistically euphoric. And that's why Warren Buffett himself is quietly sitting on $350 billion in cash. The combined market cap of Apple, Microsoft, and Nvidia now exceeds $13 trillion. That's larger than the GDP of Japan and all of Europe combined. But their valuations versus actual profits are not even comparable. Underneath all of this lies easy money. The AI boom rides the same liquidity wave that inflated the dot-coms. Rate cuts and fresh liquidity make speculation feel safe again for a while. but valuation gravity always returns. Even the brightest innovation can't outrun the math of cash flow. Every cycle begins with promise and ends with paradox, too much of a good thing. The force is strong in AI, but balance is lost. As capital chases dreams faster than profits can catch up, dark compute emerges, a monument to belief unbacked by earnings. Innovation will endure, but bubbles burst. And somewhere in the noise, Michael Burry waits again for math to matter. You're watching MarketVelugu Light on Markets. Subscribe for more interesting updates on global markets and macro trends.